Hey, it's KP coming to you live from Corona, California. Really exciting week last week. I want to talk about some of the specifics and how it impacted markets in a major way. And we'll get into how it's going to affect your home finances. We had a midterm election last week. Then on Thursday, even more market moving. All asset classes rallied and went up and improved and got better because inflation came down. It was a little bit less than expected with a report we talked about on the last video. Then we'll get into a massive blowout with the FTX trading platform that underwent a $16 billion meltdown. Okay, the midterms happened on Tuesday, Super Tuesday, and we cut our last video as that was unfolding. So very interesting to see how everything is still playing out to this day. We don't have a final result for all the races that are run. The main one right now is the Georgia Senate race. As of right now, there are 50 confirmed seats won by the Democratic Party as the Arizona Senate race was called. 50 Democratic senators plus Vice President Kamala Harris could cast a tie-breaking vote. So if there was a split 50-50, if the Georgia race went to the Republican candidate, it still is seen as the Democrats now own control of half of Congress, the US Senate. So why does that matter? Well, it matters because as of right now, even though it's not official, the US House of Representatives, which is the other half of Congress, is seen to be leaning towards a Republican majority. So this is what's known as gridlock. Now, gridlock is actually good in the business world. The reason why is if there's too much control or power from one party or the other, the president's office, the House and the Senate, then they can get a lot of their agenda done without really any pushback. And so when there's a split Congress, that means the Republicans and Democrats have to come together and compromise. One party can't spend or push their agenda versus another party spending and pushing their agenda, which they may not be on the same page. It literally forces them to compromise. So what I personally like, this is a KP take right here, hot take. What I liked about this past election is just my outside observation. Again, I'm not a big news watcher. I'm not into politics. You know, from my last video, I think politics is an ugly game. Politics is very local. And what I noticed about this election is there wasn't as much DC or outside influence as there normally is in these campaigns. That's not to say there wasn't outside influence, but at the end of the day, I felt like local citizens wielded their power to vote, which is a very privileged power that we have that most countries across the globe don't have. So I thought that was a win for democracy. I think that was a win for everybody out there. And just my take on it, the markets were not quite as moved by this election because it wasn't an overwhelming wave in either party's direction. And there still were some events that were left for discussion. There were some elections that are still being counted to this day. But what was earth-shattering, literally a massive market-moving event, was the CPI report that came out last Thursday. The Consumer Price Index is one of many reads that talk about inflation, the price that consumers, you and I, pay for goods and services. About 40% of that has to do with shelter. So there's a shelter cost, there's a rent cost, and then there's an owner's equivalent rent. All of these numbers have been coming up. They've been going up, as we know, because home prices the last couple of years have been going up and getting more expensive. We also know that year to date, interest rates have been going up. So the cost of financing homes have been going up. There was a chance that inflation would be cooling, and that's exactly what happened. The overall number for the CPI core reading came down to 6.3%, and the markets reacted in an insane way. It was a huge market-moving event last Thursday. Now, let me just reiterate. I'm going to say it again because I want to make sure I don't get into hot water with you or anybody. I am not a financial advisor. I am not licensed. I am not responsible for your losses, only your profits. But all seriousness, if you want financial advice and you're gonna take specific stock advice, you gotta go to a financial advisor. I'm speaking for informational purposes here, so let me get into it now that I've sufficiently teased you. So the markets went up. They went crazy last week. Stock markets roared. Interest rates for mortgages came down. We saw every single asset class, including cryptocurrency, which I'll get into, the massive $16 billion cratering that happened last week. I'll get into that as well. But all of these things, all these asset classes rallied. And why is that? If you recall from our prior videos, when we talked about the Fed, the Federal Reserve and the Board of Governors, when they vote whether to raise the Fed funds rate and raise interest rates and make things more expensive for us, when they want to make things more expensive, which ultimately hurts demand, they're doing that for two reasons. Remember, the Fed's dual mandate: fighting unemployment and keeping the economy at maximum employment, which is still very strong, the employment right now, and of course, fighting inflation. So right now, they're really focused on fighting inflation because the employment's good. So when an inflation data report like the CPI comes out and basically says, inflation has come down a little bit more than the smart money expected. Now, look, there are many ways to look at this. Yes, inflation still remains high. 6.3% on a core CPI reading is still very high. And if it stays high, it's still going to be that invisible tax eroding at our purchasing power because inflation is still elevated. Having said that, the markets are forward looking. They look at 6 to 9 months out. If this is a sign of times to come, that is a positive sign that inflation could in fact have already peaked, could be rolling over, making goods and services getting less expensive, which is great for our consumer-driven economy. So let's talk about how that was reflected in the markets. If rates come down and things are less expensive, that's good for you and I when it comes to spending and the power of the money that we make. When you watch the stock market rally, it's a sign of things to come. If you look at your 401k and your savings or where you might be invested in stocks, it's good to see a nice rally like that. Now, we also saw the bond market rally. Now, if the 10-year treasury yield comes down and the prices of bonds goes up, that's actually a sign of a economy that is seeing less inflation as well. And it was a pretty big move. About 28 basis points, the 10-year treasury, which we follow on this, you can see this humongous red line down right here. That red line down is a massive move. And now that is directly correlated to mortgage interest rates. If you were looking at mortgage interest rates, and one of the reasons why you have not gotten into a new home or decided to get a mortgage is because rates have been, let's say for example, a 7% rate. In one day, you were looking at 7% interest rates that day. At the end of the day, you could have locked in a 6.375% interest rate. So this is a sign of things to come. So you've got to pay attention to these things, knowing that if there are multiple days like this ahead, that will start to increase demand. So if you're eyeballing a house and there's a house you want to get into, right now is a good time. There's only 2 or 3 bidders on every house. Sellers are motivated. There's less sellers and there's less buyers right now because interest rates have gotten so high and because prices had gotten so high. But we know since May of this year that home prices have started to come down just a little bit. This is a sign of things to come. So let me just repeat this one more time. If we have a couple more days like this and you're waiting to be given that validation where, okay, now the interest rate's 5.5%, now I'm gonna go look. Well, you and everybody else. So now you're back to 10 people, potentially, fighting and bidding for the same house. And there are a lot less houses on the market. Listings are down 40% year to date. I got that information from a great group called Altos Research. Fantastic listing data. But if supply and demand, if that price action changes, just like it did in the stock market, if there's more demand for less homes that are supplied, what will happen? Home prices will go up. Even if the overall market of buyers and sellers is less than what it was a year ago. Price action is everything. So let's talk about one asset class that really moved last week. And it moved because of something that was an anomaly. A black swan event is what they call that. Well, the black swan event phrase is when something unforeseen happens. So let's talk about an entire crypto exchange, FTX, that crumbled literally and had to file for bankruptcy all within a matter of days. Why did it happen? What does it mean for all of crypto? So let me just preface this by saying that I am a believer in the underlying technology of cryptocurrency. It's called blockchain. And blockchain is just a transparent, immutable ledger that everyone can see. It's completely decentralized. People can look at it. No one can alter it. That is the technology behind blockchain. That's what blockchain is. Probably the most widely accepted and has the most history out of all the cryptos is Bitcoin. I'm not advocating Bitcoin. I'm not here to sell on it. I'm just explaining my thoughts on it. It is different than an exchange, which went out of business. If you want to buy and sell a cryptocurrency like Bitcoin, you would go to an exchange and exchange money. Maybe use your dollars to buy something like a Bitcoin or maybe other cryptocurrencies, but you have to do it on an exchange. So there are two really well-known, probably the most popular crypto exchanges, Coinbase and Binance. They both seem to have some backing and seem to have transparency, and one is publicly traded, so they have to be very transparent about their underlying assets. Apparently, this FTX exchange, which got to as much as a $33 billion valuation, was recently at about a $16 billion valuation. And there are multiple companies behind the scenes, and I don't really know all the details, but apparently some of the money that was held in that exchange was then being used at a separate account or company. One of them is called Alameda Research. The details will come out as the investigation continues because a lot of people are at risk of losing money. Is this an indictment on the entire crypto world, all exchanges, every crypto? I don't know. Does every time one of your friends do something, is that an indictment on the entire human race? You know, you have to take every instance and put it under the microscope for itself. There are good places to invest even in the crypto world, and there are some that aren't. But you have to do your research and take your risk of what you feel comfortable with. This $16 billion BK that's happened, this bankruptcy, has made people question many things about exchanges and transparency and all kinds of crypto. And that will continue to happen. So we'll watch and see the data come out. I am personally invested in Bitcoin and Ethereum. I've got some other coins, but it's less than 2% of my portfolio. I've heard many different financial advisors out there. They say don't do more than 1% or 2%. Some say no more than 10%. That would be extremely risky. Everyone has to find their own risk tolerance. So I do like blockchain. I am a fan of Bitcoin and Ethereum in that order. And I think everything else, honestly, in my opinion, all bets are off. No reason to be in a rush. All we have is time, right? So let's get into some other things that are going on out there. Let's get away from the crypto world and let's talk about some other things that happen that are going on right now. All right, so we're coming up on year end and we got to talk about tax planning. What are some things you can do to help your pocketbook between now and December 31st? So when you file your taxes in 2023, you had a little bit of forethought, put some more money in your pocket, maybe even use that as a down payment for a home. So one of the biggest things that people do at this time is they actually fight the value of their home if they are homeowner. So that can go in two different ways. Now, 2/3 of this audience is a homeowner, right? About 2/3 of America is a homeowner. So prices have been going up the last couple of years quite a bit. That means the tax appraisal rolls in each of our individual counties have been continuously raising the value as well. Taxes, our monthly payment for our taxes, has been going up as well. If you don't want to do this yourself, there are companies out there that will fight the appraised value at your local county level and fight the value of you going into next year so you can make sure that your taxes come down, your real estate taxes, when the notice goes out, that your taxes come down. So be sure to look at when your deadline is locally, when you can fight the value and how late you could submit that and get better, cheaper prices for taxes next year. Some other things you can do, there's some things called tax loss harvesting. Now, it's kind of rare that most people do this, but there are things known as capital losses and capital gains. So if you sell something like a stock, if you do that and you sell that stock, you've got about 30 days for the wash rule to not take effect, that if you don't rebuy something with that money, then you'll have a capital gain. Same thing if you have what's called a capital loss. If you sell a stock or some kind of equity or business at a loss, then you would have a capital loss. Now, let me explain the wash rule real quick. The wash rule basically says that if you buy or sell a stock, let's say you sell a stock that's a technology stock. If you sold one of those stocks and then within 30 days you rebought another one kind of in that same big cap tech realm, that is a like comparison. So that is a substantially comparable investment. So as long as you make some money with that profit, you roll it right into within 30 days a similar stock or equity, you fall under the protection of the wash rule. So now you don't have to pay the capital gains on the prior sale that you made. If you wait that 30 days, well then you got to pay capital gains. And so the same thing goes for losing money. So if you have a capital loss, there are things that you can do to offset your losses. Maybe you want to roll that money and that loss into another stock. Some people like to wait the 30 days so they can use that loss, that capital loss for selling the stock at a losing price, to then offset other capital gains. If you sell stock at a loss, okay, only $3,000 of that loss can be used to offset your ordinary income, your income on your W-2 job or whatever your primary wage earner or business is. Now, the IRS is very distinct about your income you make from your job and then your income that you make from capital gains and losses. So up to only $3,000 of capital losses can be harvested in a tax loss harvesting strategy. It's not a lot, and that's why not a lot of people employ that. I'll give an example. One of my subscription services tipped me off to buy Luckin Coffee, Luckin. It's a Chinese coffee company. It was touted as the next Starbucks in China, and there were some improprieties in their accounting, and the value of that stock went down significantly to the point where it's probably never going to come even close to making up for the losses. Wasn't a huge position for me, but from a percentage-wise, it was a huge percentage loss. Now, I could just sell whatever my remaining amount is and just use that loss to offset the capital gains. That would be an example of tax loss harvesting. So for those of you at home want to know what I did with Luckin, well, I just let it ride. I mean, it got down so low, what's the point? I didn't want to offset the losses. So who knows, maybe it'll come back someday. And that's kind of a dumb thing to do too, but I'm only human, I'm not perfect. Some other tax strategies you can employ, getting into a house if you are a renter, and this is a very important one. You can take in many states what's called a homestead exemption. So your primary residence, the house that you live in, that you intend to move into, if you buy and take possession and ownership of the house before the year is up, then you can, in states that allow it, you can have a homestead exemption. It's a pretty good tax exemption. It actually brings down the value of the home that you're buying, which then offsets some of the value that gets taxed. In essence, it reduces your tax base for that property. Something to think about as you get into year end. A lot of people are like, I'm gonna buy in January or February anyway. Well, maybe you just wanna buy in December so you can get that homestead exemption. Definitely check with each state that you live in. Some states are now prorating the homestead exemption. There are many states where it's, you have to be in the house December 31st. If you buy the house January 1st or January 2nd, you don't get that homestead exemption the entire next year. Some states have passed laws to give you a prorated homestead exemption. So another tax planning strategy that you can employ to help reduce the amount of taxes that you pay, and of course, put more money in your pocket. There are many other strategies we can get into, but again, this is just to give you some ideas, 3 quick ideas there as we roll into the new year. I hope you enjoyed today's video. Thank you so much. Cheers.